Morning, Market Chameleons and my buddy Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Great. You notice anything special today?
The background? Oh, think Vig. Is that the Market Chameleon shirt?
The Market Chameleon t-shirt's back. It's warm enough for me to put the t-shirt on.
It's like summertime.
Yeah. Just amazing what 50 degrees feels like when it's been below freezing. Let's get that disclaimer done.
Okay. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to answer your questions, provide you with guidance. There's the disclaimer.
Excellent.
And
what do you see in the pre-market?
Pre-market. So I think we'll start out today, take a look at the pre-market report, see if there are any earnings coming up in the next 2 weeks. Then if there are any questions along the way, Will, let me know. I'm going to try to answer as many of those questions as we can before the end of the show. If we have time, we'll go take a look at some bullish, bearish ideas.
Great.
So these are stocks trading in the pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to take a look first to see what's going on in the higher market cap stocks. So I'm going to use this filter, market cap, stocks 20 billion or higher. So you got a few on the top of the list. Plug, Tesla, Plug up 7.4% on 350,000 shares. Tesla up 6.8% on 500,000 shares. Baidu up 6.1%. So I think a lot of these stocks are just rebounding after, we've been getting a big sell-off in some of them. So we'll see how that holds today. But here we see 84 stocks made the percentage gainers list versus 15 on the percentage decliners list. So from that perspective, looks like a more bullish bias at the open. Let me take a look if anything's popping up on the unfiltered report. So I'm going to go to the unfiltered report, and let's do another filter here. We usually don't do, see what's going on in the ETFs. So I'm going to just use this here, see which ETF stocks are moving in the pre-market. So here we got a couple, I think these are leveraged ETFs here, SOXL, TQQQ. You got QQQ up 2.3%. So I'm just looking for higher volumes in the morning. SPY up 0.9%. EWZ down 1.3%. Let me unfilter that. Let's see if there are any stocks making 52-week highs in the pre-market. So these are stocks that are moving in the pre-market, and if they open here, hitting new 52-week highs. So EYES, I think that's a biotech stock. Did we see that on the list yesterday? I believe we did.
Sounds familiar.
Yeah, so this is yesterday, up 103%, up 72% in the pre-market hours. And I believe, here you go, it is a biotech stock. I'm not going to go into interpreting that news, but I'll leave that up to you. But that, second day in a row, making large gains here. So that would be a new 52-week high. INVO, I think that's also a biotech, up 71%. So here we go, six of them right now trading in a pre-market. If they open here, new 52-week high. What's the Discovery Channel?
Yeah.
So that was up 4.7% yesterday, trading $68 in the pre-market, up 1.1%. If it opens here, that's a new 52-week high. That's the previous day's 52-week high.
I don't know how much TV you watch, but they've been running commercials for months now promoting their new network that you have to pay for. So they've got a new subscription plan, basically.
I see. And so what are they going to be, like a HBO?
Well, it's more like a Netflix for Discovery shows. They have all this content they've created, but you have to pay for it. So you get it off, your tablet, basically.
Right. Well, I think, and what Disney's also doing that, and I feel like HBO is kind of moving towards that as well. I think with HBO, you could stream it now from, not just from your cable, but from the internet. If you're using, if you have a login, I think you could go and, if you're traveling or whatever, you could go log in and stream the HBO movies.
Yep.
So Netflix kind of showed the way. Now you're seeing other.
Yeah, ESPN's doing the same thing.
ESPN, yeah. So it's interesting. So there you go. That's a new 52-week high. Let me just take a look real quick on that. I'm just curious to discover. So 32 billion market cap. It's interesting. Let me one sec. Having trouble closing here. Let's take a look at 52-week lows. So over here, ACAD, DASH down in the pre-market hours. So those are the two 52-week lows. Actually over here, CBT, SMDD, if they open here, those are hitting new 52-week lows. So I'm going to unfilter this. If there are no questions on the pre-market report, Will, I'm going to move on to the earnings, what's coming up on the earnings.
Perfect.
All right. So here, going to this earnings tab up here, upcoming earnings. And first, I'm going to use this filter to look for stocks that on average trade 5,000 option contracts per day or more. And let's see what's coming up in the next 2 weeks. So I'm going to click on this tab here, and this will give us a list of stocks that meet this criteria and are set to report earnings in the next 2 weeks. So we got one here, CLNE. See here, trades on average 10,000 option contracts per day or more. That's expected to report today after the market close. Right here, that's what the AMC is. The expected move. Now, this is an expected move up or down. So keep in mind, that's the magnitude of the move. If you're buying a call and buying a put, you're buying a straddle, and the stock has to move by enough to cover the premium of both the call and the put. So it doesn't matter if it goes up or down, it's the magnitude of the move. So here, that's based on yesterday's closing prices, that's implying 19.3% move. Well, how does that compare to what the stock historically moved after reporting earnings? So let's take a look. So in the last 4 quarters, if we took on average the absolute move in either direction, up or down, on average it moved 11.3%. In the last 12 earnings, the average move was 10.4%. So we see, based on the current implied straddle, it's 8% above that 4-quarter average, 8.9% above the 12-quarter average. The high move in CLNE, the biggest move after reporting earnings in the last 12 quarters, was 34.7%. Okay. How does today's straddle compare to historical straddles, how they were priced the day before earnings? So in the last 4 quarters, on average, the straddle is implying a move of 17.3%. In the last 12 quarters, on average, the implied move was 11.4%. So you can see here today a little bit higher than the 4-quarter average and the 12-quarter average. EXPR, that's expected tomorrow before the market opens. Let me just see what this could be. A low price stock here. Yeah, $4 stock. So I'm going to try to skip it to the higher price one. So here, Oracle, that's trades almost 29,000 contracts per day on average. It's expected to report earnings tomorrow after the market close. The straddle is implying a move of 5.2%. So let's see how that compares to the 4-quarter average move. In the last 4 quarters, on average, the stock moved 7.1% after reporting earnings. Last 12 quarters, average move was 5.2%. So we're 1.9% below the 4-quarter average, in line with the 12-quarter average. the high move on that stock after reporting earnings in the last 12 quarters was 20.4%. How does the straddle compare to historical straddles? So we're at 5.2%. In the last 4 quarters, the average was 6.3%. Last 12 quarters, the average was 5.7%. So below that 4-quarter average and 12-quarter average. I'm going to move to some of the stocks that trade more options on average. So CLDR, let's open that up in this informational sheet. So we see it's software applications company, Cloudera, or Cloudera. Is that how you say it?
Cloudera, I think.
Cloudera. So you could read more about it in here. I'm going to close it here. So let's take a look how that straddle is lining up. So that stock's expected to report earnings tomorrow after the market close. Straddle, right, as of yesterday's close, implying a move of 14.1%. The 4-quarter historical realized move on average 8.2%. Average 12-quarter move 16.7%. So you could see 5.9% above the 4-quarter average, but 2.6% below the 12-quarter average. The high move on that stock, 40.8% after reporting earnings in the last 12 quarters. Then we see here the straddle as of yesterday's close, pricing a little bit below that 4-quarter average and the 12-quarter average. AMC, so that one's been interesting one, right? The AMC entertainment theaters. And
Yeah.
are they open right now, or they're still closed?
I think in some markets they are open.
Okay.
I mean, I read today 22 states are fully open for the rest in the restaurant space. So you could go to a restaurant and it's like like it was a year ago before this happened.
Like 100% open now, the restaurants without.
In 22 states, restaurants are open to full capacity.
Yeah.
I don't know if you have to, I'm assuming you still have to wear a mask coming in, but maybe not. I have no idea.
Right. And we've kind of seen that also, money kind of flowing from the stay-at-home type businesses to the economy reopening, right? So we've seen that like Carnival Cruise Lines, airlines. So at least from that perspective, investors are starting to feel more optimistic about the economy reopening. But AMC theaters right now, we see as of yesterday's close, that straddle is implying to move 22%. That compares to a 4-quarter average move of 7.3% and a 12-quarter average move of 6.8%. The high move on that stock, 14.7% in the last 12 quarters after reporting earnings.
We did have a chameleon who was asking earlier this morning if you could dig into the AMC a little bit deeper.
Okay.
So
let's take a look at. I'll take a look at AMC and Oracle. How about that? Because these are the two big ones. I think I have time for both. Let's do Oracle and then we'll go to AMC. How's that sound?
Sounds good.
So we'll take a look. First, we'll take a look at it from the options perspective, what they did. Then we'll take a look at what they did after reporting earnings previously, what the stock did between earnings, just to see if there's some optimism building up going into the earnings. So here, this is a chart of what the options expected, the move prior to earnings versus what the actual move was. So these bars here are telling us, starts from 0, what the options implied to move in either direction, up or down. So you could see here, I'm going to go to the previous earnings. I'm going to hover over this so you could see the data. So December 10th, after the market close, Oracle reported earnings. The stock was up 1.9% that day. The straddle was implying to move the day before 4.5% up or down. So you could see that move was more muted than the straddle was implying. So here we see that that the stock made a very big move after reporting earnings on March 12th. So March 12th, after the market closed, the stock reported earnings that day was up 20.4%. However, the day prior, the straddle was only implying a move of 9.9%. So if you sold that straddle, you would have had to buy back for more money. You would have been losing money. If you sold it, if you bought that straddle, it was a winner. So that's how you look at this. And
it's interesting to think about, because March 12th was basically right at the start of I mean, it's this week or next week when the economy started shutting down last year. So that was their earnings, but I mean, I'm assuming it was someone positive, their earnings.
Yeah, that's what it looks like. That,
but you know, since then, my God, you know, they haven't been able to open their doors since probably.
Well, this is Oracle. Will, this is Oracle.
Sorry, I thought you were looking at AMC. My bad.
No, this is Oracle. So
gotcha.
I'll go to AMC next, but this is what happened on March 12th in Oracle, and I'll take a look at what they were doing leading up to their earnings. But just showing how to read this graph. If you see a red bar here, that's letting you know the actual move to the downside. Again, it's just the flips on June 16th after market close. Oracle reported earnings. Stock was down 5.6%. Straddle was implying a 5.3% move. So you could see that that move was a little bit higher than the straddle was implying. If we take a look at the statistics, it looks like the straddle overestimated the move in Oracle 58% of the time. On average, the straddle was predicting a move of 5.7% versus a historical realized move on average 5.2%. So you could see there about a 0.5% differential between the implied and realized. Let's take a look at what the implied volatility tended to do. So implied vol here, we're looking at a 30-day IV. So this is an option that has 30 days to maturity. Now, we're not looking at the very near term, because the very near term is mostly gamma. So you're looking, that's pricing in mostly the move. As you go out further in time, there's more and more vega in the options, so more implied volatility risk. So this one's looking at a 30-day constant maturity, right? So if you're doing diagonals or calendar spreads. So we see here, on average, the implied volatility day after earnings was down 34%. So average implied volatility day before earnings, 37.1. Average implied volatility day after earnings, 24.5. 5 days later, 24.8. So you can see here, down 34%. Right now, we're around 33, so a little bit below that average. And if we scroll down here, we could kind of see we're over here today. So that's the average, you know, heading, we're still like 2 days away. And this is the range, 52 to 25 in implied volatility. So that's Oracle real quick. Let's take a look at what it did last time. So here's earnings per share versus actual, and then the stock reaction. So here they reported earnings. The stock, they beat expectations by 6 cents on earnings per share. They beat revenue by 10 million. Stock was up 1.9%. So you see here it closed around $60.61. Day before it was $59.48. So if you hover over there, you kind of get a really quick view 2 days before earnings, 2 days after, to see how the stock was reacting that around this December 10th earnings. If you want to read the press release, click on there. This way you could go there and read more about the earnings release, what the company had to say, very important, you know, if they issued guidance. So you could go down here, and I'm not going to read it right now just to save time, but that's how you do it. Here's where it was up 20%, Will. So you could see here, jump from $39.80 day before to $47.93 day after reporting earnings. And most likely because they were probably falling into ahead of earnings due to that coronavirus, right? So maybe after they reported earnings, gave some guidance, that stock popped 20.4%. That's on that March 12th. So let's take a look at what the stock has done since the last earnings. So we see here, they reported earnings, stock, people had a chance to read that press release, take in the new numbers, put it into their model, hear what the company had to say, reprice it quickly. So by the end of the day, we're at $60.61. Since then, now we're building up to the next earnings. Let's see what the stock has been doing, what kind of expectations potentially people are building up into the next earnings. So I'm going to go to here to the post-earnings drift. And we see here, I'm hovering over this. This is the most current post-earnings drift. We're up 19.5% since the day after we reported earnings, right? So here, up 19.5%. And how does that compare to historical drifts? So historical, on average, it gained 3.4% over the last 12 quarters, and a one standard deviation move was up or down 12%. So we see we're above that one standard deviation, 19.5%. So it's a little bit of optimism starting to get built up coming into next earnings. And we see here that historically, 58% of the time, the stock after reporting earnings drifted higher into the next earnings. 42% of the time drifted lower for an average gain of 3.4%. So a little bit of optimism building up coming into this earnings according to that drift. So I'm just hovering over where you see here where we saw that big gain of 20% on March 12th.
Yep.
So you can see here coming into that earnings, right? That stock was down 26% prior to the earnings from the previous, in between earnings down 20. So that's why we probably saw that big pop.
Yeah.
So you had a really big drop heading into that earnings prior to that. Let's just go to AMC. So last one, stock patterns. Let's just see what it tended to do. So heading into earnings, historically, it looks like, the stock didn't tend to rally into the earnings. Actually, it seems like it was pretty weak heading into earnings, because I'm seeing on average, it lost some share of it, before earnings, 2 weeks, 1 week, 3 day, 2 days in 1 day. Day of earnings, it looks like it opened lower 58% of the time, higher 42% of the time, but on average, it was a wash. And day of earnings, it looks like 67% of the time closed lower, 33% higher. So that's just really quickly price return distribution around earnings in Oracle. AMC.
Excellent.
So let's take a look at AMC real quick.
Just so you know, we had Andy on, was asking about the block trade screener. Maybe tomorrow we can get to that. I know we only have about 7 minutes left. It's going to be hard to get through AMC and the block trade screener. Okay. So maybe we'll make note of that.
Okay. Yeah, we'll take a look at it tomorrow.
Hey, D.
So here's AMC.
D, your voice sounds like it's underwater. You may want to log out and log back in.
Do you want me to stop and come back in?
Yeah, please.
Okay.
Hey guys, as D reboots his computer and comes back in, please thumbs up are always appreciated. I know I never really say it. Thanks for all the chat. And it wasn't Andy, it was Ronald Fields. Ronald, if you're still on, we will try to get to that block trade screener tomorrow. That's always a good thing to look at. As you can see, my t-shirt is back on here in Pennsylvania. It is getting a little warm, so I can actually wear it again. Are you back, D?
Yeah.
Excellent. You sound good.
All right. Let me share my screen again.
Yeah, definitely.
So this is AMC. We see the history of its earnings, and that's comparing what the straddle was implied prior to the earnings versus the actual move. So we're right here right now. So you can see here how long that bar is. The previous bar Actually, we could see that it was even bigger. The expected move was even bigger than this time around. So we see November 2nd, after the market closed, AMC reported earnings. Stock was up 8.8%. That straddle was implying a 28.2% move. So relative to that move was more muted than the expected move. You can see here, August 6th, stock, after the market closed, company reported earnings. Stock was up 14.7%. Straddle was implying 11.8% move. So that move was exceeded the expectations. Let's take a look at the longer term statistics. So in the last 12 quarters, the straddle overestimated the move 75% of the time. On average, the straddle predicted a move of 12.3% versus an actual realized move of, on average, 6.8%. So big differential there. Again, this stock, a lot of uncertainty going on right now. So you got to be careful, what's going on. And I'll show you really quick. I actually just quickly took a look at the revenue drop from before to after, and it was probably one of the most extreme that I've seen. But let's take a look at what the implied volatility did after reporting earnings. And here it looks like we're looking at a 30-day maturity. On average, implied vols were down 11% after reporting earnings. Day before earnings, average IV was 97.5. Day after, on average, it was 89.4. 5 days later, 90.9. I think, it's also getting skewed by the most recent, right? So I'm just coming down here. You could see how much more recently in the last year it's been much higher than historicals due to that special situation where they're just still mostly, I think, on lockdown.
Yeah, Jake is in the chat and he's saying you got to take all the data of the last year, take it with a grain of, you got to understand it, right? There were big moves, drawdowns, things were going going on in the marketplace.
You always have to dig into the data and to understand it, like what else is going on, right? Because the data is just pointing you to something. But yeah, you're right, and Jake's right. You got to go in there and investigate what's going on with this stock. Every stock is different, they have their own nuances. But let's just take a look here on the earnings per share, right? So this is its history. Going back, so you could see here, that they were profitable. Earnings per share. You could see here, revenues were in a 1 billion, 1.5 billion range, 1.5 pre-corona, 1.3, 1.4, and then this happened, right? So you go from $1.5 billion in revenue to 19 million. It's a drastic, change. And you could see here it looks like November 2nd, 119 million, right, in revenue. Much, how do you even, I don't even know how you analyze that, right? It's just now you got to just hope that once they reopen, it starts coming back. But you could see here, much bigger loss than expected on the revenue and earnings per share, but it was up 8.8%. So that's another thing to keep in mind. The stock, right? The stock price, whatever it is, reflects traders and investors' expectations. It does not reflect the expectations of analysts, right? Analysts might have, these are the consensus estimates. Market could miss or beat, but really it's the traders' expectations that the price is reflecting. So you could see here, you see misses, right, on the earnings per share, but the stock was up in each case. Look, 3 times in a row, stock was higher. So last time, stock reported earnings, missed. It was up 8.8% after, and you can see it was like $2. Went from $2.15 to $2.34. up 8.8%. But let's just take a look at that post-earnings drift. So this is what it did since the last reported earnings, up 306%. Again, it's a special situation. I think now it's just building up to the expectations that they'll start to come back online, getting back to, trying to get back to normalcy, right? We're in a shutdown economy here. Now it's kind of trying to price in, what if we reopen? Hopefully that was helpful. We're right up at 9:30. So
very helpful, D. Well, remember the option block trade screener for tomorrow. Great job, D. Thanks as always.
All right. Thanks, everyone. Stay safe. Have a good trading day. Hope to see you guys tomorrow.
Trade in peace, chameleons.